Hey there, folks. I do apologize for being a little bit late on this video. I planned to put it out on Saturday, Sunday, but I just got super busy, didn't get a chance to do so, but here we are now, right? So what I'm going to be doing is I'm going to be going over last Thursday. Why is my chart tweaking? I'm going to go over last Thursday because I made over $42,000 on Thursday. So I want to go over like the strategies that I used to pull that off, right? That's the basis behind this video. Now, of course, everything plugged in the Discord chat, plugged in the free Discord chat as well. So I just kind of got to bring the receipts as always. So it doesn't look like I'm just going in here in hindsight into replay on TradingView. That's not the case. Okay. So let's start here. So you can see I plugged into the USD 419 AM, lower time frame shift into the USD, right? Pretty simple, but like, how do I approach something like that though? That's the real question. Like, okay, we got a lower time frame shift. That's cool, Mike. That's cool. But in regards to like a PT, a stop, how would you approach something like this? For starters, we go to the daily chart here. Why do I go to the daily chart? Because I got to see what liquidity's been taken here. With my market structure shift deals, if it's a bearish shift, that is, like was in this case, I like to see a lot of buy side taken. What is that buy side taken in this scenario? Previous day's highs. See this right here? That's Wednesday's highs. Thursday had already taken care of that. So I got that high taken. I got this higher time frame imbalance right here that you see has been rebalanced as well. See that? So I got that imbalance. I got the previous high taken. And if we go to the 4-hour chart, what you'll see is this thing's ramping up here. Look, here we are, Thursday. It's ramping up. Sure, it's strong, and this is another important thing that I'm going to note here in a second. It's strong, but it has a lot of liquidity taken. But because it's strong and it's been pushing up here, this isn't a scenario where I want to be very aggressive with. Now, I'm totally not very aggressive with my PTs regardless, but especially in this scenario, you want to be nimble about how you approach it. What do I mean by that? What do I mean by that when I say you got to be nimble about how you approach it in regards to a PT? What I mean is whenever I'm taking profits with a market structure shift deal, and I have several different strategies. I know some folks are like market structure shift. What about CC? What about CC? What about THS? I do all three. I have a combination. I use all three. Okay. But in this case, it was a market structure shift deal on in this specific scenario. So I have a lot of liquidity taken. I have it in a premium marketplace. Okay. And, oh, and what do I mean by when I say it's a premium? Well, from this low to this high, it's a premium. I take that low because that low grabbed the previous swing point, which is right in here. So we got this thing in a premium. What happens? What happens? We're coming up here, making new highs. Here's another thing to note about this. With my market structure shift deals on the 5-minute, I need to see what I call a 3 o'clock sweep if it's a bearish scenario. What all that means is I like to see it make a new high after 3 o'clock. And it doesn't gotta happen. It doesn't gotta happen immediately after 3. I mean, it can happen at 4. It can happen at 5. Like that's fine, all the way up until 60 into my kill zone. But I need to see it make a new high for a bearish scenario, and it does. So right here, it's coming up. It's making new highs, and then look right here. What's this? What this is a fair value gap. I get a fair value gap in there. I get a strong close beneath the short-term low right there. You see that? That is a confirmed bearish shift in market structure right there. So because I need on my shift, on the displacement, I need to see a fair value gap. 3 candles make the fair value gap. Follow my cursor closely. 1, 2, 3. Bottom of the first, top of the third, don't touch, makes an imbalance. I also need to see a strong close beneath a short-term low. What is a short-term low? A short-term low is the swing low right here. So look, you see how that candle right there in the middle is lower than the one on the right and the one on the left, where my cursor is pointing. On the right and on the left makes it a short-term low. I need to see a strong candle close beneath that level, and it does. I got the fair value gap. I got the strong close. So that is confirmation. So far I have concluded that I have the major liquidity sweep. I have the strong close. I have the fair value gap. Now what? Now it comes to establish where my PT is going to be, where my stop is going to be. I just told you a moment ago that you want to be conservative with these deals. You don't want to be like trying to swing for the fences or anything on it. So here's a 15-minute dealing range. Okay, why is this a 15-minute dealing range? That's a 15-minute deal in range because that grabbed liquidity. Like you see, like this low right here didn't grab any liquidity. That didn't grab any liquidity. Like none of this like grabbed a previous swing point. Whenever I'm measuring my deal in ranges, I take the low that grabbed a previous swing point, and it did right there. Okay. So what does that leave? What that leaves is this level in a discount as my PT area. Okay. So you could see it did come down. It cleaned it out a little bit later in here, but I actually did not get that for a PT. And you might think, what do you mean? Why? Did you bail early? Did you break rules? I didn't break my rules. I followed my rules because part of my rules also is I will not hold a 5-minute market structure shift deal from London into New York session because I trade London and New York session. So I won't hold a London deal into New York session. So my cutoff point is 8 o'clock, and you might be thinking, okay, well, what's the logic behind that? The logic behind that is when I did my back testing and I tested it, I got better results if I cut it. And you like really the best deals, they'll go pretty quickly. They won't do a lot of chopping. They'll go pretty swiftly. And if you were to go study in your own trading as well, you'll probably find a similar scenario. Your best deals typically, they don't take all fucking day to really play out. Okay, this one did do it a little bit later, but that's how I approach it. So if I don't get my move by New York, if it's a London deal, I pull the plug on it. So I got out of it because it kind of found support off the imbalance in there and just kind of chopped around a lot. So I had to just get out of that deal. You know, you're thinking, okay, well then how the fuck did you make over 40 grand then? Well, because I have multiple trades, right? This is just one of them. I'm going over several of them in this video, and I'm going to try to give you all a lot more stuff like this, kind of like more with my own personal trading type of stuff, right? I'm going to be keeping the regular video lessons coming too, like I've been doing on YouTube, but I want to give a little bit more of my style, right? And how I personally approach the markets, okay? And if you do want to see a little bit more of that, let me know, because I kind of want to know where the vast majority of the audience would like more videos on, right? If you want more videos on like my personal trading style, or do you like kind of the educational stuff that I have been doing with just, you know, just like just general education, right? Okay, so now I had a market structure shift deal on EU as well. So let's talk about EU. So here's the deal on EU, folks. EU had come up and it had taken out this high. You remember I said on the previous example with my market structure shift deal, so I want to see a lot of liquidity taken. So with a bearish deal, it is ideal. This isn't 100% the scenario every single time, but it is ideal to have previous day's highs taken at least. So right there, see how that's been handled? So I have that liquidity as well as that imbalance in there, the higher time frame imbalance in there, and price comes up and it takes it early. That's the thing. It takes it out early. We're coming to London session. Follow my cursor. We're coming to London session, and this thing is pressing up. It's pressing up in here. Let me just go to replay. It's pressing up, making new highs in here. So yeah, it's bullish. It's bullish, which brings back the same thought process that I said on the previous. You want to be conservative with your PT, but it's a lot of liquidity. You're talking about, you know, previous day's highs, Asian session highs, as well as being in a deep premium marketplace. So this thing, it is due for a pullback. All right. So how do I come to the conclusion that it's ready for that pullback, that it's ready to make that push lower? By waiting for confirmation. As I've taught you, we wait for that confirmation signal to take place. Okay. So what does that confirmation signal look like? A fair value gap and a strong close. So you see we get that fair value gap and we get that strong close right there. You see that right there? That was after it came up, 3 o'clock sweep. Here's 3 o'clock. It's making new highs after 3 o'clock, and boom, big displacement, fair value gap, strong close right there. That is my confirmed shift. Okay. So I had this internal created. Right here beneath these relative equal lows in here. So I had like really smooth equal lows down there. So of course I figured that ain't gonna, oh wait, right here. See that? I have that internal right there on the 1 hour, and then I have like these really smooth equal lows down there. You see how that works right there? So I get that displacement. I got really clean equal lows down there, because you know the deal with equal lows is price doesn't like to leave super smooth levels like that intact. It doesn't like to. Super clean, super smooth with an imbalance down below. So I get my displacement, okay? And in this thing, am I able to get in right here and target that right there? Is that something that I'm able to do? No. That's not 1-to-1. I need at least 1-to-1. Now I have a lot of scenarios where my stop will actually be above the high, which I talked about in my 1-to-1 video. A lot of times more times than not, actually, that's how I approach deals. I'll have my stop above the high, but it depends, right? CC deals, 100%. A lot of wiggle room, as y'all know, with CC deals. Market structure shift deals a lot of time too, but not every single play is the same. Why is this play not the case? It's not the case in this play because, like, I got my target and it gives me 10 pips. So 69. So you can say I got my 10 pips already. And then right there gets me 1-to-1. So here's the reason. I got 1-to-1 already and I got 10 pips already. And then that's how I approached it. Just for a simple 1-to-1, right? So what did it end up doing? It ended up coming down, of course, and I locked in gains right there. Draw's been handled, or a short-term draw's been handled, right? Now, this was a CC deal, but I want to make clear that this actually wasn't that great of a deal. And something I do a lot more now, I'm really strict with this now, is implementing my 20-minute rule. So this is something that you're going to write down. Because I had adaption rule come into play on this. So it was a break-even deal, if I recall, break-even deal. So like I didn't take like a big loss or nothing on it. It was break-even because of the adaption rule. Because adaption rule, if it's a bearish CC deal, so I had this thing right here, strong close. Looking to run out that low right there. Price came up. We took out that candle high right there. Had to pivot, all that tested. And so I got that push up. But the second that closes right there into 5 o'clock, that's my cue to get out of there. So I get my push up though. So let's kind of rewind a bit. We get that push up, right? So I know I want to target that low right there. We come into 4 o'clock. We come into 4 o'clock and we push up here. Okay. So this is where I look for like that fake shift that I would call it, right? It comes up, it grabs his buy side. And then look right here. That was my confirmation signal that I hopped in on. And that was right there. You see that? That fair value gap, that strong close right there. That's my confirmation signal. And I hopped in that. But like I just told you, adaption rule came into play into 5 o'clock. Here's 5 o'clock. Look at my cursor. So you can see how I'm able to get out of that at break even because it's still in the same area, just chopped around. It didn't really do anything. So I'm able to play good defense, get out of there. But here's why this was not a great deal. And now this is something that I'm starting to implement a lot more. And that is the time element of it, right? The time element being, I got the displacement, but you got to think ahead here. Like, that's not really a power of 3 signature when it does it that late in the candle. I mean, it's not super late. I get it. Like, it's like just right after 30 minutes. It's not super late, but it's still on the later end. You're in the later half of that 1 hour candle when it's doing that. I've said it before, the first 20 minutes, getting that sweep, getting that displacement in the first 20 minutes, it skyrockets your win rate with CC. Okay, so this has happened a little bit late because the manipulation run, you want to see the manipulation run with candle confirmation early, just like with the weekly range. You see the manipulation run early, Monday, Tuesday, sometimes Wednesday, but typically Monday and Tuesday. The daily range, you see it like right after midnight, early London. The 1 hour candle, you want to see it happen preferably first 20 minutes. So that's why I say this isn't the greatest deal, because it was a little bit late. So then it chops around, just runs out the clock on me, because it's not a signature for, it's not the ideal time for that manipulation run and displacement to happen. You see? So I was looking to run out that, it couldn't do it. Play good defense, got out of it. But that's a lesson, folks. I want you to, if you're serious about learning CC, write that down, take note on that. 20 minutes, folks. Okay. So now we got ADUSD here that we're going to go over. Market structure shift deal in London. So I had this thing come up, same process as the previous that I talked about. Look, that was the liquidity that framed it. I had previous day's highs taken, higher time frame imbalance. See this right here? Real time, plugged in the chat, in the free Discord as well. ADUSD, bearish shift, drawn to the fair value gap below. And again, if you want in that free Discord chat, there's a link in the video description. Right here, real time, no hindsight. So we take out that higher time frame buy side. My chart is tweaking again. Let's give it one moment. So ADUSD, like I mentioned, we got a lot of liquidity on this thing with previous day's highs. You got that imbalance. You got the 4 hour, which is in a deep premium as well. So you see this thing, it's pressing out this higher time frame buy side in here. And then I get my lower time frame shift, my confirmation that I was just talking about a second ago. You see this right here? That fair value gap right there? that's created on that push lower, as well as a strong close right here. Look at my cursor right here. Follow along closely. Beneath that low, strong close. That confirms. So that is a confirmed shift. I can now hop in that. What am I going to target? What I'm going to target is the 15-minute. Take your Fibonacci from where? That low to that high. You see I have this fair value gap right here on the 1 hour. So it's in that 15-minute discount, 1 hour and 15 minutes. It's in both. It's in a 1 hour discount. It's in a 15-minute discount, but that's like that next key level. That's that next key level in a discount for me. So 50% right there. See that? So I have that imbalance. So I ended up taking it down into that. So I got my shift, and then I just ended up taking it down into that imbalance. And that's how I approached it. Well, actually, wait, no. Yeah, I took it down to the imbalance, but also like you had that 20. So that's another thing to note about that, is I had that 20 institutional price sale in there as well. See that? So it's a combination of things. You have the imbalance right there. You have it in the discount. You have the 20 institutional. So that's how I approach that deal. That's just the next key level below 50%. Now we got ADUSD. Look, right here, timestamped. Bearish CC deal confirmed. ADUSD. So I plugged it as soon as I got the confirmation, the displacement to get in it. Okay. So let's unpack it. And what made this a valid CC deal? Okay. So what frames it is, I got this right here. Now I'm going to make this clear because I know it's on somebody's mind. Because this is the CC deal. You see my cursor, this strong close right here? That's the CC deal that frames it. You know, somebody might be thinking, though, whoa, hold up, though. I got you. This is a swing point. You broke the rules. Didn't you say that you need this thing in a downswing? That you need this thing in a downswing for a CC. Here's the thing when I say I need it in a downswing. Highest high in the middle, lower high on the left, lower high on the right, conviction to the downside. That puts in a swing point here. But that swing point, that new swing point that's put in, has no conviction to the upside. So I don't put a lot of weight on that. I look at that candle as fuel. And here's the thing, and I've talked about this a lot recently too. With your CC deals, when you have third candle like this taken to fuel the push, it's even better. It is even better for CC deals. When you have that third candle taken, look how it wicks through it. That's the manipulation of that high. When you have that, it makes the play so much better. Even better, folks. Okay, that's what frames it. It puts in this, it closes inside the range. And now that, just look at that candle as like a big bucket of fuel for the push down into this. So price opens up right here at 9 o'clock. Go back to the chat. Look, where did I plug that at? First 20 minutes. It confirms in 20 minutes. Look at that right there. So we get this thing. It is confirming. It takes out that high right there. Of course, you got your 5-minute sweep. So like you see this thing that's coming up right there. Look, here's 9 o'clock, ramps up, displaces. Okay. So it comes up, it takes out that buy side of that 1 hour candle high. And you see like right here, it's confirming. So it actually did it right there in 20 minutes. So right smack on 9:20, it does it. You see that? So it confirms right there. And what happens? So it pulls back and then it just finds resistance and it folds throughout the remaining hour. See how that, because when you give that displacement early, it gives it time to expand for that 1 hour candle. You have liquidity to work with early. So it takes out the 1 hour candle high liquidity. We got our fake shift on the 5-minute and it has all that liquidity to work with here early on in the candle. Power of 3, that manipulation run happens early, just like on the weekly range it does, the daily range it does, the 4 hour, the 1 hour. It happens early in the candle here. That's what you got to understand here. And this is what I really want you to take away with CC. You need liquidity to frame it and then utilize the time element that I'm telling you here. And it's going to skyrocket your results if you can do that, if you can get yourself to do that. Right? Because CC isn't just strong close, run out the low. Because the folks that struggle with CC, they all have a common thing that they are approaching the markets with, a common mindset that they're approaching the markets with. And they don't have any understanding of liquidity because they haven't watched any of my other video lessons or paid attention to my other video lessons or gone into their charts and actually studied this stuff in their own charts. They're just trying to trade any old strong close that they see. They're just trying to pattern trade, and pattern trade is bullshit. Pattern trading is bullshit. You need context. Okay. So what the context is, everything that I just said there. So that frames it. And then what happens? It gets folded, handles it. Smooth like butter. It expands lower. All right, take your focus right here. So you see I plug GU. 9:43 a.m. timestamped GU 5-minute bearish market structure shift deal confirmed. Okay. So I'm going to show you how I approach this. Talked about it on stream with my mentees as well about how to like what PT to target, etc. So the thing about GU is we already had previous day's highs taken for one. And on this particular day, this had news. That gave me even more conviction because I love market structure shift deals after high impact news. Not during high impact news. Sorry, don't twist my words. After. I will trade before high impact news and I will trade after, but I will not hold during. Okay. If you are a scalper and you are holding through high impact news, especially with normal size, you're a degenerate. Be better. You're 100% a degenerate. You're 100% fucking it up. Do better. There's no reason for that. I get it if you're a swing trader, because, you know, if you're a swing trader and you're trying to bail after every high impact news release, you're going to be jumping in and out, right? A lot. But if you're a scalper, there's no reason to. You're getting out of this, in and out of this stuff quickly. There's no reason to hold through that. But here's the deal. This thing coming up, look, follow my cursor. We're ramping up. It's making new highs. It's very bullish. I get it, but that's also influenced by news. What happens here? 8 o'clock sweep. Here's another pointer. Just like I said a moment ago, I need a 3 o'clock sweep with my London deals. I need an 8 o'clock sweep with my New York deals. But if it happens from news, I don't technically need it. Now, because this doesn't happen that often, but this actually had news in London on this, so I can frame my shift off that without a sweep because that's the manipulation run. So I don't necessarily need the 8 o'clock sweep if I already had a manipulation run prior, but it still gave us a sweep, took out that high, and look what happens here. That fails to displace. You see that candle right there? How it took out that high and it failed to displace. That's a bearish signature. Because what price is essentially telling you is we do not want to move higher. It tried to move higher. It took care of that high. It failed to displace. It couldn't do it. What that does is it creates internal down below. What's that? That's an opposing draw. So think of it like this. It has collected that liquidity. Where my cursor is pointing, it has collected that liquidity. It fails to displace. It respects it. And it creates an opposing draw down below. You already got the fuel. This is the fuel. This is the draw. Okay. Now, all I need now is a confirmation signal being the shift, the fair value gap, the strong close. And I get it. Look. So we come down and you can see I got the fair value gap initially right here. And I got the strong close a bit later. That was right there. Look at my cursor. See that right there? Look at my cursor. There's your short-term low. There's your strong close beneath that short-term low, and that confirms. Okay, so that is a confirmed bearish shift in market structure. How did I approach this? How I approached this was I ended up targeting that institutional in the imbalance. What institutional? 0-0. Why 0-0? Like I just told you, that is level of support. Institutional price levels. And I have videos on this. If you haven't watched my video on which is an ICT concept, all credit, I have videos on institutional price levels. I will leave a link to that in the video description. Okay, so if you don't know what that is, you need to watch that video. But in simply the 0-0, the 20, the 50, and the 80 institutional price level. This is the 0-0. So it's a level of support. So I get the shift right there, folks, and I hop in it. And I ended up targeting that institutional in that range with a 1-to-1 stop on the thing. So it was a little bit above that high. And smooth like butter comes down and it handles it. Now, why that right there? It's more specifically. Once more, like this is a Dillon range. So that grab that sell side right there. That makes this a 15-minute Dillon range. So it's the same process. Measure that Dillon range. That's a 15-minute Dillon range. Find 50%. What is right smack on 50%? The institutional. That's how I got that PT. Just like that. So when it's like a counter trend deal like this, like that's how I approach it the vast majority of the time, is I just work within that 15-minute Dillon range and I target an execute level within that range. You got to have a lot of liquidity to frame it. You got to have an opposing draw, confirmation, and then that's how I do it. Yeah, folks, that's what I had on the 7th. So some days I'll have market circle shift deals that kind of picks up the slack a bit, and then I'll have some days where CC is really good, and it really just kind of rotates back and forth. Some days CC is harder than market circle shift deals. Sometimes market circle shift deals is harder than CC deals. So it really just kind of takes turns, but that's what framed it. So what you learned in this lesson, though, is you learned how, in more detail, how I approach market circle shift deals, but I also gave you some pointers on CC about like the time element, the third candle. So that gives you something to go in and work with, something to go in and test, because that's how I personally do it, folks. So if you do want more stuff on like my personal trading style and how I personally do it, make sure to let me know in the comments below so I actually know that there's a demand for it, because if nobody is fucking interested, well, then what's the point, right? If nobody wants to see more videos on that. So if you do want to see more stuff with my personal style, let me know. And also, if you have any other ideas on video topics, feel free to let me know in the comments below. All right, hope you enjoy.